Portions of this podcast use AI-generated voices and AI-assisted analysis for commentary and entertainment purposes.
You know, when most of us think about the exploding AI revolution or the sudden rush to cover the entire planet in high-speed satellite internet, we really tend to picture software.
Yeah, completely. Just endless lines of code.
Right. We imagine these massive cloud networks floating ethereally somewhere in the sky or, algorithms learning at the speed of thought. It feels entirely digital. Weightless, almost.
It's a very powerful illusion, honestly. But, I mean, the cloud isn't actually in the sky. It is firmly on the ground.
Yeah.
And it is incredibly, undeniably physical. Every single time you ask a chatbot a question or stream a video over a satellite connection, you are relying on highly complex, energy-intensive hardware.
And that physical reality is exactly what we are diving into today. Welcome to our deep dive.
Glad to be here.
Our mission today is to figure out how a mid-sized hardware company is attempting to position itself as the literal foundation, like the critical enabler of this entirely new, greener data economy.
Which is no small feat, by the way.
Oh, absolutely not. And for you listening, we have our hands on the latest financial data to help us figure this out. Specifically, we're looking at the Q4 and full year 2025 interim report from Sivers Semiconductors.
Yeah, and when you look at the raw materials of this report, the income statements, the CEO's commentary, the granular segment reporting, you see a company standing right at the intersection of several massive global trends.
It's a dense read, for sure. 29 pages.
It is, yeah. But as financial analysts, we look at reports like this to gauge the health of the broader tech ecosystem. And the narrative inside this particular document is just fascinating.
The hook here is wild, too. I mean, on the surface, Sivers just posted their highest ever Q4 revenues.
Right.
Their opportunity pipeline just experienced a massive 64% surge. But when you peel back the layers of this 2025 report, you find a much more complex story.
You really do.
You have a company navigating a notoriously difficult strategic pivot, battling a multi-million krona data security breach, and racing to supply the physical hardware demands of both the AI and satellite communications industries. Okay, let's unpack this. Let's start with the top-line triumphs.
Yeah, let's do it.
Yeah.
But before we get into the actual technology they are selling, we have to look at the financial architecture of the company, because their entire business model is undergoing a fundamental shift right now.
Okay, how so?
Well, the headline numbers for the full year of 2025 are striking. Record net sales hit 304.1 million Swedish krona. That is a 25% increase year over year.
And actually, if you factor in the currency fluctuations, like looking at it in constant currency, it is actually an impressive 33% growth rate.
Exactly. That underlying growth is robust. But the metric that really stands out for future valuation is that opportunity pipeline we mentioned.
The 64% surge.
Right. It ballooned by 64% in 2025, reaching a staggering $453 million US. Now, alongside that massive pipeline, their product revenues specifically hit 85.7 million krona.
Which is a 13% increase.
Yeah, a 13% increase.
Let's pause on that word for a second. Product. Because in the semiconductor space, a strategic pivot from NRE, non-recurring engineering, to a products-based business is a massive structural shift in how a company makes money.
It changes everything.
I like to think of their old model, the NRE side, like being a master tailor who only makes custom bespoke suits for individual clients.
That's a great way to put it.
Right, like you get paid well for the design time and the consulting revenue is great, but every single suit requires a massive amount of specific, unscalable labor from your absolute best engineers.
And that perfectly captures the friction of the NRE model.
Mm-hmm.
You're basically being paid to solve a bespoke hardware problem one at a time.
Which doesn't scale.
Exactly. The transition to a products-based business means taking those custom designs and figuring out how to manufacture them off the rack at scale for thousands of customers. You standardize the silicon.
But the R&D for that must be huge.
Oh, the upfront R&D costs are brutal.
Yeah.
Once the product is qualified, the profit margins expand exponentially because you are just stamping out chips.
Okay, but I have to look at that $453 million pipeline number with a bit of analytical skepticism. I mean, a massive pipeline looks fantastic on a slide deck, but a pipeline isn't recognized revenue.
No, it is absolutely not.
It is basically a list of people who might eventually buy your standardized off-the-rack suits. So how is a company of this size actually planning to convert those hypothetical opportunities into cash in the bank?
Well, that is the ultimate test for their management team right now. To convert a $500 million pipeline You cannot just rely on having brilliant engineers.
Right, you need a sales team.
You need a ferocious, highly structured sales engine. And Sivers is heavily investing in go-to-market strategies to make this happen.
Okay, what does that look like in practice?
Well, a major signal of this intent was their appointment of a new chief revenue officer in November, Raymond Bayagan.
Ah, yeah, the industry veteran.
Right. And the CEO's statement explicitly notes that he is already expanding their sales footprint across the U.S. and China. They are actively moving from an engineering-led culture to a sales-led culture.
Which naturally makes me wonder where those sales teams are actually hunting. I mean, now that we understand how they are restructuring their sales approach, we really need to figure out where the demand in that pipeline is coming from.
The demand is heavily concentrated in their fastest-growing segment, which is wireless. This division is just an absolute powerhouse in the 2025 report.
Let me look at the numbers here. Yeah, it grew by 35%, generating 211.7 million krona in full-year net sales.
It's massive growth.
But wait, here's where it gets really interesting. I'm looking at the list of clients driving that 35% growth, and it spans completely different industries.
Like a very diverse list.
You have defense contractors, commercial satellite operators, and terrestrial 5G telecom giants. How does one mid-sized company effectively juggle the U.S. military, the European Space Agency, and commercial telecom without losing focus?
If we connect this to the bigger picture, it seems incredibly scattered until you understand the underlying technology. Because Sivers isn't building the satellites.
Right.
And they aren't building the 5G telecom towers or the military command centers. They are providing the fundamental millimeter wave and beamformer plumbing that all of these next-generation networks desperately need.
Okay, let's break down that plumbing for a second. When you say beamforming, what are they actually doing to the data?
Think about a traditional radio antenna like the one on an old car or a basic Wi-Fi router. It blasts a signal in every direction, kind of like a floodlight.
Okay, so it just covers everything around it.
Right, and that is fine for low-speed data, but it wastes an immense amount of energy. When you're dealing with high-frequency millimeter waves, the kind needed for gigabit satellite internet or 5G, you can't use a floodlight.
You need something more targeted.
Exactly, you need a laser pointer.
Yeah.
Beamforming is the physical ability to electronically steer a focused beam of radio waves directly at a moving target.
Like tracking a low-Earth orbit satellite from a moving tank.
Precisely. And doing it without moving any mechanical parts. It's all done electronically.
So they are making the specialized chips that steer the signal. They're basically providing the ultimate specialized shovel for a dozen different data gold rushes.
That's a great analogy. And the market validation for these chips is really piling up. I mean, in defense and SATCOM, you have the U.S. Army granting TRL-6 approval for a user terminal made by a partner called Allspace, which utilizes Sivers components.
Let me jump in there really quick. TRL-6 technology readiness level 6. For anyone listening who is unfamiliar with defense procurement, what does that actually signal to the market?
It is a massive de-risking milestone. TRL-6 means the technology is no longer just a theoretical concept working on a lab bench.
So it's actually been built?
Yeah. Yes. It has been built into a fully functional prototype and successfully tested in a relevant real-world environment. For defense contractors, that is the green light that the tech is viable for actual deployment.
Wow. Okay, that's huge.
It is. And the momentum doesn't stop there. Sivers is in the final stages of contracting for $6.6 million in U.S. CHIPS Act funding for an electronic warfare program.
And that's just in the U.S. Over in Europe, the report says 3 separate vendors are moving to the RFP stage for the IRIS-2 satellite infrastructure program, and all of them are incorporating Sivers solutions.
Exactly. And we haven't even touched on the commercial side yet. They signed a $1.5 million antenna array development partnership with Doosan Corporation,
which opens up the highly lucrative South Korean market.
Right. Then, right at the end of the year, they landed a December 11th contract with the European Space Agency, and add to that a $3 million production order from Tachyon Networks for fixed wireless access solutions.
It really proves your point, doesn't it? The physical problem of steering a high-frequency wave is exactly the same whether you are in space or beaming internet into a suburban neighborhood.
That is the beauty of the standardized product pivot. You design the core RF capability once, and you sell it into multiple massive verticals.
All right, so the wireless division is successfully beaming this data across the globe and through the atmosphere. But, eventually, all that data have to land.
It does.
It has to hit a server room to be processed. And that takes us into their second major division, photonics.
Right. Photonics is essentially the science of using light-specifically lasers to transmit data. Now, in this 2025 report, the photonics division grew at a more modest 8%, reaching 92.4 million krona.
Okay, I have to push back here. I'm looking at this 8% growth in photonics, and frankly, I'm confused.
Why is that?
We hear about AI data centers constantly. The big tech hyperscalers are spending hundreds of billions of dollars on AI infrastructure right now. Every other company touching the AI supply chain is seeing triple-digit growth.
Oh, absolutely.
So, with AI expanding at a breakneck pace, why is Sivers Photonics division only growing at 8% right now, while wireless is at 35%? Shouldn't the AI boom be patting their pockets today? Are they just missing the boat entirely?
It is a very perceptive question, but it really comes down to understanding the hardware gestation cycle.
Okay, walk me through that.
Software can be updated and deployed overnight, right?
Right.
But physical hardware, especially at the microscopic level, takes years to qualify and scale. Sivers isn't missing the boat. They are currently building the engine for the next iteration of the boat.
Ah, I see. So it's a longer play.
Exactly. Their massive future catalyst is solving what is known in AI data centers as the optical interconnect layer bottleneck. It's an issue with scale-out and scale-up architectures.
Because right now, the standard way to connect servers is with traditional copper wiring.
Yes, and copper is hitting the absolute limits of physics. When you link tens of thousands of advanced AI GPUs together to train a massive language model, they have to share mountains of data instantaneously.
And copper just can't keep up.
Not at all. Copper wires simply cannot move the data fast enough. They degrade the signal over short distances, and crucially, they generate way too much heat.
So the entire industry is racing to replace copper cables with fiber optics, using light to move data between the chips inside the server room itself.
That is the optical interconnect. And to make that work, you need incredibly specialized lasers. Sivers is producing something called CWDFB lasers, which stands for Continuous Wave Distributed Feedback Lasers.
Let's translate that into plain English for a second. What makes a DFB laser so special for an AI data center?
Well, a standard laser can fluctuate slightly in its frequency, but a DFB laser is unique because it emits a single, incredibly pure, stable color of light.
Why does the color matter so much?
It is vital when you are trying to pack massive amounts of data into a tiny optical fiber. If the color wavers even a fraction, the data streams bleed into each other and the whole system crashes.
Oh, wow. Okay.
Sivers manufactures these pure light engines, but right now they are just in the sampling and qualification phase with major pluggable transceiver manufacturers.
So they are sending out test batches to the big players, essentially saying, hey, integrate our lasers into your next generation server designs and see how they perform.
Exactly. They are establishing the strategic groundwork today. For example, the report highlights a November 6 partnership with Poet Technologies to sample lasers for their optical engine.
And there's also that broad market partnership with DigiKey, right?
Right, to get these components into the hands of more design engineers globally. The broader tech industry is projecting a massive supply crunch for these specific lasers in the next 2 to 3 years.
So Sivers is placing their pieces on the board now, but the real production commitments aren't expected to hit the income statement until 2027.
Exactly. It is a long game strategy requiring intense R&D spend today for a massive payoff tomorrow.
And it looks like AI isn't their only play in the photonics division. The report mentions a fascinating wild card: automotive LiDAR.
Yes, the LiDAR wildcard.
They note that a lead customer is preparing to ramp up production in Q4 of 2026. And Sivers projects, this single relationship could deliver cumulative revenues somewhere between $28 million and $53 million between 2026 and 2030.
It is a massive chunk of potential revenue. But again, it is future revenue, which brings us to the most sobering part of any interim financial report,
The balance sheet.
the balance sheet. We have discussed cutting-edge tech, pure light lasers, and high-profile partnerships. But developing and scaling physical hardware is brutally expensive.
So what does this all mean for the bottom line? We need to look at the costs, the friction of operating in this space, and the financial runway keeping the lights on.
Let's start with the operational profitability. The full-year adjusted EBITDA, which measures the core profitability of the business before interest, taxes, and depreciation, improved by 31%.
But it's still negative, right?
Yes, to negative 10.8 million krona. But the real standout is that if you isolate just the fourth quarter, adjusted EBITDA was actually positive 10.8 million krona.
Wow. Okay, that is a critical milestone for a hardware company. Proving you can generate positive operational cash flow in a single quarter shows investors that the underlying engine can actually work.
It does. But the broader picture is a bit tougher to swallow. Full-year EBIT earnings, before interest and taxes, was negative 141.3 million krona. That is a heavy loss.
It really is.
And it was exacerbated by some significant financial costs. The report shows a 31 million krona non-cash foreign exchange loss due to currency fluctuations.
Now, as analysts, we tend to look past that slightly, don't we? Because Sivers operates across the US, Scotland, and Sweden, so intercompany funding creates currency translation impacts on paper between the dollar, the pound, and the krona.
Right. It looks painful on the ledger, but it does not affect their underlying cash generation.
Fair enough. The FX loss is just paper math. But there are very real cash expenses pulling down that bottom line. I see a line item for non-recurring costs in Q4 alone that totals 31 million krona. How does that break down?
Well, the majority of it is tied directly to that strategic pivot we discussed. You have 11.9 million krona allocated for strategic projects and another 6.3 million for restructuring.
Which is just the painful cost of transitioning from custom engineering to a scalable product model.
Exactly.
Yeah.
But the line item that really stands out is 8.5 million krona directly attributed to a data security breach.
Wait, really? A data security breach? In a semiconductor hardware report?
Yeah.
We usually think of cybersecurity as a software problem, like a bank getting hacked or a retail chain losing customer data. How does a hardware component manufacturer end up taking an 8.5 million krona hit for a data breach?
This raises an important question about capital allocation, honestly. It is a stark reminder of the hidden costs of operating in the modern tech ecosystem.
Because of who their clients are?
Exactly. When your client list includes the U.S. military, the European Space Agency, and next-generation AI infrastructure developers, your intellectual property becomes a prime target for state-sponsored actors and corporate espionage.
Ah, that makes total sense. So the objective report of the data breach shows that these operational hiccups have very real, painful margin impacts.
They do. It highlights the immense friction of doing business in these high-stakes sectors.
So you have a company burning through cash to finalize R&D on pure light lasers, spending millions to restructure their sales teams, and absorbing millions more to harden their cybersecurity defenses against global threats. That is highly capital intensive.
Extremely.
How are they ensuring they have enough runway to survive until those massive 2026 and 2027 production orders finally materialize?
They addressed that immediately after the reporting period closed. On February 24, 2026, Sivers secured a new $17.0 million loan facility with Bootstrap Europe.
Okay, how is that structured?
It is structured as a $5 million term loan and a $12 million convertible loan.
Securing that kind of capital in this high interest rate environment is no small feat.
No, it was a vital strategic move. They utilized this facility to replace their existing more restrictive loans and fundamentally secure the balance sheet.
So it buys them time.
Exactly. It provides them with the financial runway needed to execute their product pivot strategy without the immediate threat of insolvency.
And I guess, more importantly, it signals to the market that institutional capital looks at that $453 million pipeline and believes in it enough to bridge the gap between today's heavy R&D costs and tomorrow's production revenue.
It's a high-wire act, without a doubt. Building the physical infrastructure for the future of human connectivity and advanced computing is not for the faint of heart.
And it certainly isn't for the light of wallet.
No, it perfectly encapsulates the dual nature of an advanced semiconductor company right now. On one side of the ledger, you have record revenues and incredible technological validation from the most demanding customers on Earth.
Right.
And on the other side, you have the messy, expensive, and sometimes highly volatile reality of scaling a global manufacturing operation to meet that demand.
Which brings us back to you listening to this deep dive. If you are trying to understand where the greener data economy is actually heading, you really cannot just look at the software layer.
You really can't.
You can't just follow the big tech hyperscalers releasing new chatbot interfaces or, watch rockets launching the latest satellite internet constellations. You have to look at the ground level.
You have to understand the energy-efficient hardware enablers. The companies painstakingly crafting the pure light lasers and the RF beamformers that make it physically possible to move all that data without completely overloading the power grid.
Because without the hardware, the software is just a theoretical concept. The physical layer is where the real bottlenecks of the future will be solved.
Absolutely.
And that leaves us with a final thought to mull over. As the world demands exponentially more data for training massive AI models, for seamless global satellite coverage, for fleets of autonomous vehicles, The biggest bottleneck going forward isn't going to be writing better code.
No.
The bottleneck is physical, it is heat, it is light, it is power consumption. So 10 years from now, will the ultimate financial winners of the AI revolution actually be the famous software giants we all know today?
That's the billion-dollar question.
Or will the real fortunes be quietly made by the relatively unknown, under-the-radar component makers who hold the physical keys to keeping our data flowing? Think about that next time you ask an AI a question.